Welcome back to Squawk. I want to get down to the New York Stock Exchange. Our good friend Jim Cramer joins us right now. By the way, Jim, before we even get to what's on your mind, I want to tell everybody that you're hosting a big event. I'm going to be watching. It's a special event today. It's at 12:30 Eastern Time for his new CNBC Investing Club. And he's going to be telling everybody about his outlook for 22 and answer everybody's questions. It's a very cool new project. And I've been reading the emails religiously. So there, a little.
Jeez, thank you, Andrew.
Little promo for my friend. But tell me what you're thinking this morning. I'm curious. We just had that Apple conversation, how we should take this epic decision, and also some of the other stocks that are moving this morning on the other side, or something like Rent the Runway, for example.
Well, look, I thought your interview was excellent, Rent the Runway. I know it's not a large cap company, obviously very small, but I think you asked some questions that I felt weren't answered correctly, or at least were not answered on point about actual profitability and losses. And I think that people are turning on these kinds of stocks. They want an Apple, which actually has real earnings, even if the price earnings multiple is high. But boy, Andrew, that was just a very interesting interview, because what it says is that maybe we are at the peak of the closet in the cloud plus moment. And I'm going to talk about that on my conference call. Closet in the cloud being kind of just stereotypical of what so many of these new companies, salad in a cloud, sweet greens. You and I are we're all tired of it, Andrew. We want earnings. We want a price to sales ratio that is, let's just say, accommodative of what used to be the case. And Andrew, when you see those things, it just really, I felt that story was just untouchable after that interview.
All right. Okay, different question then. So Nubank going public today, down where you are at the New York Stock Exchange. How do you think about a company like that?
Oh, I like Latin. Ever since Mercado Libre, I was actually original investor in Mercado Libre, and everything that comes out of Latin America that gets here actually has a funnel. I mean, remember, we're printing anything, right? We used to print anything China. We're putting anything up that's a SPAC. It's actually hard to get a company listed if you're from Latin America. And so there's a vetting process. Remember vetting?
Yep.
Remember?
Back in the day.
And yeah. Well, this company's vetted. I'm going to take a hard look at it, because any company that's there has tremendous growth. I mean, look, Santander I thought was going to be able to do it, but they separated. They broke up the company. But I'm looking for, ever since Mercado Libre, I think which is the eBay of Latin America, I think you have to pay close attention to Latin America. Etsy made an acquisition down there, too, and it's working out very well for Etsy. So I'm interested in real growth. And with the growth that is at a reasonable cost for the company. And I find, well, look at that. Okay, so lately not so hot, but none of these companies doing that well right now. But I think, Andrew, these are very, very interesting companies that are from there, because they don't get here by just saying, you know what, we ought to go list in the New York Stock Exchange. There's a process.
Okay.
Remember process?
I don't remember. Oh, process in like the process. Yes, I do remember the process.
No, not the Sixers. Not the 76ers.
I don't remember that company.
But, no, I mean, what we're seeing is, I mean, look, I don't know what SPAC comes public today, but look at all those. Look at the detritus. I mean, look at these things. I mean, these things.
But do you think we're in a sentiment shift? Do you think we're in a sentiment? Do you remember when after Uber, this is now the IPO of Uber, everybody was revenue crazy. Then all of a sudden everybody said profitability, and then everybody sort of had to switch on a dime. Do you think that's what's happening here?
Well, you had Kathy Wood on. She says it's not a bubble. Kathy, if we talk more about some of those stocks that she's been buying, she just buys them down. Zoom she buys all the way down. DraftKings she buys all the way down. But those, again, are they're archetypes of what is not. I was going to say not working, but that's too much in deference to when I used to talk to the late great Mark Haynes. But that's not what the market wants. It's not what the people want, Andrew. They want actual companies. They've lost too much money. They've all lost too much money on this stuff. And there's a rebellion against it. And I think the rebellion is correct.